Hey, everyone, and welcome back to Investing Talk podcast. Today, we're going to be looking at Truist Financial Corporation.
Mm-hmm.
They're a big player in the regional banking world.
That's right.
And you can find them on the New York Stock Exchange under the ticker symbol TFFC.
Yeah, they're super interesting right now, especially since they're, facing some pretty strong economic headwinds, just like the rest of the financial sector right now.
For sure. For sure. So let's start with the basics here for our listeners.
Okay.
Truist is, a big name in the Southeast U.S.
Mm-hmm.
They've got a market cap of about $62 billion.
Right.
But what's really caught my eye is their stock performance lately. It's been on a wild ride.
It has been pretty volatile.
Yeah.
On January 23rd, 2025,
Okay.
TFC closed at $46.77. But in the past year, we've seen it swing between a high of $49.06 and a low of $34.23. What do you think is causing these swings?
Well, a lot of factors, I'm sure, but that huge jump on January 17th really stands out to me.
Right.
Their fourth quarter earnings report really blew past analysts' expectations.
Yeah, they had a positive surprise. Their investment banking and trading income were up almost 59% year over year.
Wow.
Reaching a massive $262 million.
That's a lot.
So yeah, it seems like their CEO, Bill Rogers, is making some smart moves.
Yeah, he's been pushing for technology upgrades and focusing on digital efficiency, and it seems to be paying off.
Yeah.
But do you think this success is sustainable?
Oh, that's the million-dollar question, isn't it?
Yeah.
They are doing really well right now, but some analysts have actually downgraded the ratings on Truist.
Oh, really?
Yeah, there are concerns about their valuation compared to historical averages.
I see.
And there's talk of a potential decline in net interest income as interest rates potentially fall.
So it's not all smooth sailing for Truist. What does this mean for someone who's, thinking about maybe adding TFC to their portfolio?
Right, it creates a little bit of a puzzle for investors to solve.
Yeah.
The short-term momentum might be tempting, but long-term investors need to consider these potential challenges.
Right.
Do you think Truist is doing enough to address these concerns and stay ahead of the curve? Especially with all the competition from fintech companies these days.
That's a great point. They did recently announce a nationwide retail financing partnership through Sheffield Financial,
Okay.
which seems like a strategic move to expand their reach.
Makes sense.
But are they doing enough to stay competitive in the long run? I guess that's something we'll need to explore further.
For sure. And while we're on the topic of long-term considerations, let's not forget about Truist's reputation for rewarding their shareholders.
Right.
Their dividend yield is currently sitting at around 4.37%.
That's definitely attractive, especially with inflation still on everyone's minds.
Oh, yeah.
And let's not forget about their $5 billion share buyback program. That's a pretty strong sign of confidence in their own stock.
You're right. That buyback program suggests they believe their stock is currently undervalued.
Yeah.
But let's not jump to conclusions just yet. To get a clearer picture of their potential trajectory, we need to delve into the technical analysis.
Okay, let's unpack that a bit. What are the charts telling us about TFC?
Well, if we look at the various moving averages, short-term, medium-term, and long-term, they're all flashing buy signals, which seems to support an upward trend for Truist. But there are other indicators we need to consider too, like the RSI and the Williams %R. Have you had a chance to look at those?
I have, and those are the ones that have me a bit puzzled. Could you explain what those indicators tell us? Especially for listeners who might not be familiar with them.
Absolutely. So the Relative Strength Index, or RSI, measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock.
Gotcha.
In Truist's case, the RSI is currently at 58.03.
Okay.
The Williams %R, which is similar to the RSI, sits at negative 6.22. Both of these suggest the stock might be entering overbought territory.
So even though we have those buy signals from the moving averages, we need to proceed with caution because of these overbought indicators.
Exactly. It's like we have this tug of war between positive momentum on one side and the possibility of a short-term pullback on the other.
I see.
It's a classic market dilemma, and it raises a crucial question. How do we make sense of these conflicting signals?
That's what I'm here to find out.
Right.
And I'm sure our listeners are eager to hear more about it too.
Well, you've come to the right place. Let's take a closer look at these conflicting signals and see if we can unravel this intriguing investment puzzle. So those overbought indicators we were just talking about.
Right.
They aren't the only ones raising eyebrows.
Oh, really?
Yeah, the Commodity Channel Index, or CCI, is currently sitting at a pretty high 184.52.
Wow, that does seem high. For our listeners who might not be familiar with the CC, can you give us a quick breakdown of what that number actually means?
Sure. The CCI is another tool that helps us understand where a stock price stands in relation to its historical average,
Okay.
a high CC. I like what we see with Truist right now reinforces the idea that the stock might be overvalued.
So even though we have those buy signals from the moving averages, we need to proceed with caution because of these overbought indicators.
Exactly.
Right.
Think of it this way. It's like a car driving uphill, but it's running low on fuel.
Okay.
It might keep climbing for a bit, but eventually it's going to need to refuel.
Yeah.
In the case of Truist, that refueling could mean a dip in the stock price.
That's a helpful analogy.
Yeah.
So for investors looking at Truist right now, what's the takeaway here? Should they hit the brakes or step on the gas?
Well, if you're looking to make a quick profit, it might be wise to wait for a potential pullback before buying in.
Okay.
You could try to buy near those moving average support levels we talked about earlier.
So patience is key for short-term traders.
Right.
But what about those of us who are, in it for the long haul? What does Truist offer long-term investors?
Yeah, for those looking at the bigger picture, Truist's focus on technology and disciplined expense management makes them an attractive option. They're laying the groundwork for sustainable growth.
And of course, we can't forget about that enticing dividend yield.
Indeed. That 4.37% yield, combined with their share buyback program, paints a pretty compelling picture for holding on to TFC stock over the long term.
Right.
They seem to be trying to appeal to both income-seeking investors and those looking for growth potential.
It's like they're trying to walk a tightrope, balancing those two different investor profiles.
That's a great way to put it.
Yeah.
They're trying to position themselves for success in a rapidly changing banking landscape. But let's zoom out for a moment and consider the bigger picture. How do you think factors like interest rates and inflation are impacting Truist's performance?
That's a crucial question.
Yeah.
The current economic environment is quite complex.
Yeah.
The U.S. economy is strong,
Right.
but we also have a tight labor market, which makes it difficult for the Federal Reserve to significantly cut interest rates.
Yeah.
What are your thoughts on how this impacts a company like Truist?
Well, one potential consequence is a steeper yield curve,
Okay.
which can impact stock valuations. In a steeper yield curve environment, investors often demand higher returns from stocks compared to bonds.
So even if Truist continues to perform well, external factors like interest rate changes could still affect their stock price.
Exactly.
It's not just about their internal performance. It's about the forces at play in the larger market.
It's a complex interplay between Truist's internal decisions, their strategic initiatives, and the broader economic environment.
Right.
It's like trying to solve a multi-layered puzzle where all the pieces are interconnected.
And that's what makes investing so fascinating, isn't it? It's not just about crunching numbers. It's about understanding the story behind those numbers and how they fit into the larger narrative of the market.
You hit the nail on the head.
Yeah.
And with Truist, the story is far from over. It's a company in motion, and there are many chapters left to be written.
So what's the next chapter in this story? What should investors be watching for in the coming months? What are some key things to keep an eye on?
Well, one important development to track is how Truist's net interest income evolves in response to potential interest rate fluctuations.
Makes sense.
That will be a key indicator of their resilience in a changing market.
Any other factors you think are worth keeping tabs on?
Definitely keep an eye on their technological advancements and how those translate into improved customer experiences and operational efficiency. Their commitment to innovation will be crucial in this digital age.
And let's not forget about the competition from those fintech companies. That's an ongoing battle for all traditional banks, including Truist.
Absolutely. Observing how Truist navigates this competitive landscape and differentiates themselves will be crucial for their long-term success.
Right.
They need to show investors they can adapt and thrive in a world that's becoming increasingly digital.
Okay, so we've covered a lot of ground here.
We have.
We've talked about Truist's recent performance, their strategic decisions, the potential risks they face, and their commitment to rewarding shareholders. What's the bottom line for investors who are considering adding TFC to their portfolio?
Truist presents a compelling investment opportunity, especially for those with a long-term perspective.
Hmm.
Their strong performance, coupled with their strategic initiatives and commitment to shareholder value, makes them a company to watch.
Yeah,
However, it's essential to remain aware of potential headwinds, such as valuation concerns and interest rate risks.
right.
It's a balancing act between potential and caution.
So what you're saying is that investors need to carefully weigh the opportunities against the risks
Right.
and make informed decisions based on their own investment goals and risk tolerance.
Exactly. There's no one-size-fits-all answer in investing.
Right.
Each investor needs to do their own research and make decisions that align with their individual financial goals.
For sure.
But I think this conversation has provided a solid foundation for anyone who's looking to understand Truist's current position and future prospects.
I agree. We've discussed a lot of important information today, and that brings us to a crucial point. And that crucial point is that investing is a journey, not a destination. It's about learning, adapting, and making informed decisions based on the information available to you.
Very well said. It's not about, trying to time the market perfectly or chase the latest hot stock. It's about building a diversified portfolio that aligns with your long-term goals and risk tolerance.
And remember, you don't have to go it alone. There are resources available to help you along the way, like financial advisors, reputable financial websites, and of course, podcasts like ours.
That's right. We're here to help you explore the world of investing, break down complex topics, and hopefully make the process a little less intimidating.
So as we wrap up our discussion on Truist Financial Corporation, what are some key takeaways you'd like our listeners to remember?
I think the biggest takeaway is that Truist is a company at a crossroads. They're performing well.
Yeah. But they also face some significant challenges.
Right.
Their success will depend on how effectively they navigate those challenges and adapt to a changing market.
It sounds like investors need to keep a close eye on Truist and see how their story unfolds. They could be a great addition to a portfolio, but it's important to do your own research and make sure they align with your personal investment strategy.
Absolutely. And remember, every investment decision carries some level of risk.
Right.
The key is to understand those risks and make informed choices that you're comfortable with.
Well, I think we've covered a lot of ground today.
Yeah.
Hopefully our listeners have a better understanding of Truist Financial Corporation, their position in the market, and the factors that could impact their future performance.
Yeah, it's been a pleasure sharing my insights with you and your listeners today. I always enjoy these conversations.
And we always enjoy having you on the show. Now, before we sign off, we want to remind our listeners to subscribe to Investing Talk podcast so you don't miss out on any of our future episodes. Yes, and don't forget to leave a comment below. We'd love to hear your thoughts on Truist. What stood out to you? What questions do you still have?
And if you found this episode helpful, please share it with a friend who might be interested in learning more about the stock market. Happy investing, everyone.